Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering a notice and some FAQs the IRS released regarding the new clean vehicle credit. This credit was established under the Inflation Reduction Act, and we have a 2-hour webinar on this act and its provisions on February 15th. You can see what we'll be covering and get registered at spidell.com under webinars. The new clean vehicle credit under IRC Section 30 Cap D, formerly known as the new qualified plug-in electric drive motor vehicle credit, was modified by the Inflation Reduction Act and signed into law on August 16, 2022. Notice 2023-1 provides critical information for taxpayers for new clean vehicle credit provisions that went into effect as of January 1st, 2023, including definitions of important terms such as final assembly, MSRP, and North America. Without directly saying as much, the guidance strongly implies that for the new clean vehicle credit, for the purpose of leased vehicles, the credit is claimed by the vehicle's lessor, not the lessee. The language of the Inflation Reduction Act was interpreted by some to mean the lessee was eligible to claim the credit. Whether a new clean vehicle is classified as a truck, van, or SUV depends on guidance issued by the IRS in Notice 2023-9, which might not match the classification on the fuel economy label or marketing materials describing the vehicle. From a practical standpoint, taxpayers are required to be given a report by the dealer, which the dealer will also file with the IRS, that provides all the information necessary to claim the credit, including the vehicle's classification. The report has to be provided to the buyer before the sale of the vehicle is finalized. Also, the IRS's website that's used to look up whether a vehicle qualifies for the credit identifies whether a vehicle's applicable MSRP limit is $80,000 or $50,000. A taxpayer who purchased a new clean vehicle in 2022 from a manufacturer that was subject to the 200,000 unit sales cap, but takes delivery of the vehicle in 2023, is ineligible for the clean vehicle credit. A new clean vehicle is considered to be placed in service on the date the taxpayer takes possession of the vehicle. Notice 2023-1 provides a technical definition of final assembly, but generally provides that taxpayers can rely on the following information to determine a qualifying vehicle's final assembly point: the vehicle's plant of manufacture as reported in the vehicle identification number, or the final assembly point reported on the label affixed to the vehicle. The notice defines North America as the territory of the United States, Canada, and Mexico, as that term is defined in the United States-Mexico-Canada Agreement. The notice also defines MSRP as the retail price of the automobile suggested by the manufacturer and the retail delivered price suggested by the manufacturer for each accessory or item of optional equipment physically attached to the automobile at the time of its delivery to the dealer. According to the FAQs the IRS also released on this topic, MSRP does not include destination charges or optional items added by the dealer or taxes and fees. The guidance is clear that the actual purchase price is irrelevant. We'll be covering the new guidance on several of the clean vehicle credits in the February 2023 issue of Spidell's Federal Tax Letter. You can download a sample issue of this monthly publication and subscribe at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.